If you're watching this video, chances are you're probably new to day trading. And there's even a higher chance you're probably going down the big black hole of YouTube searching trading concepts. I've been there. Everyone I know who's began in trading has gone through it. And I'm sure you're probably there right now. Lucky enough for you, I have been in the trading industry for 4 years. My name is Brad, and I have spent a lot of my time learning and understanding and implementing the concepts you're trying to learn here today. Give me 5 minutes and I will tell you everything you need to know about break of structures in trading. Let's get started. Breaks of structure in the market. What is a break of structure? A break of structure in the market is simply how trends continue. It is the creation of a new point from a previous existing point. And without a break of structure, a trend could simply not exist. The main takeaway from this section here is that breaks of structures are going to happen inside trends. And pro tip here for the future, you're going to want to trade inside the trends, and those trends would simply not exist if it wasn't for the beauty of a break of structure. Okay. What does a break of structure look like? Well, before I show you the diagram, at this point, you should know that it's going to look like a creation of a new point that comes from an existing point within structure. So let me put that diagram in front of you so you at least have something to refer to. You have a bullish example and a bearish example. In the bullish example, price goes on to make a higher high from a higher low, surpassing the previous higher high. So it starts off with a higher low, you make a higher high, and then from this higher low, it passes the previous higher high. So this would be called the break of structure. It is the creation of this new point from this previous point. Let's look at the bearish example. Price goes on to make a lower low from a lower high, surpassing the previous lower low. So you have a lower high, a lower low, a lower high, and now you have a lower low that surpasses the previous lower low. And that new lower low is the creation of a new point in structure. And that comes from the previously existing lower high. Now, something important to know is a break of structure isn't just price moving higher. It is showing you who is in control of the market. So what's actually happening in a break of structure? Back to the bullish example, you have initial buyers getting involved here. The buyers push this market up to this higher high, and this is where sellers start coming into the market because they're unaware of the previous buyers that took this market higher. So sellers come in and they drag the market down. And this point here, this higher low, right? This higher low right there is where buyers actually re-enter the market and push price higher than its previous peak. This is the creation of the new point in structure from the previous existing point. This is buyers re-entering the market and taking it past where the sellers got involved. So that's the bullish. This is the bearish example. Yo, what is up, guys? Before I get into the bearish example, it would mean the world to me if you took 2 seconds, hit the like button, subscribe to the channel, because I have many more videos coming your way. Bye for now, and back to the video. So you have initial sellers getting involved. They drag this market downwards, and then buyers start coming into the market because they're unaware that sellers are in control and have already previously pushed this market down. So they start getting involved. The buyers make this lower high. They push the market up to this lower high. Same thing like over here. Sellers get involved. Buyers enter here where my cursor is. They push the market upwards a bit. And now the buyers are unaware of the underlying selling. The sellers are in control. So where I'm trying to take you guys with this is that a break of structure just isn't showing you the direction, right? It's not just price going higher or lower. It's showing you who is in control of the market. And at this point here in the bearish example, the sellers are in control. So when buyers get involved here, the sellers then re-enter the market, dragging the market down. So that is actually what's happening when you see a break of structure in the chart. And now you guys can actually go ahead and start identifying breaks of structure for yourself. But before we go, because who would I be if I didn't give you guys some on-chart examples here, I'm going to open this right here, and we are going to focus on this area here. Let me do this, and then let me do this. This is a trend. So where this square is, I have circled, or sorry, I've outlined a trend. And within this trend, if you remember from the very beginning, without breaks of structures, trends would simply not exist. So can a break of structure, or sorry, can this trend exist without breaks of structure? No, it cannot. So with a click of a button, I have highlighted to you the break of structures that I see within this trend. And you are going to notice that what you're looking at right here is just, well, first off, there's more than one break of structure. So you see them in a series. That's what happens in a trend. You have one after the other, usually. You're able to take this and understand that breaks of structures happen consecutively in a trend. And now your underlying condition that you're now aware of is that buyers would be in control of this market, because we know, let's zoom in on one. Let's zoom in on this break of structure here. We now know, if we refer back to this diagram, this is the previous point that buyers got involved. So buyers got involved. And this point up here, the higher high, is where sellers got involved because they were unaware of the previous buying. So they get involved and they push this market down to what we now know, or maybe didn't know prior, but you now know now. They push this market down in a bullish example down to the higher low. If you're able to understand and see visually what side looks like they're in control, whether it's the buy side or the sell side, where in a picture like this, you should be able to go in and identify that price is moving upwards and breaks of structures are happening to the top side. So you know the buyers are in control. And these points here are where buyers get re-entered. So buyers re-enter the market and they take this price higher, creating this break of structure. And what's cool about trading is that whatever happens on one side happens on the other side as well. So if I were to show you the bearish example, well, I just flipped the market upside down. And you'll now see all the break of structures are the same. They're just happening to the downside. Because in this trend, the sellers are in control and the sellers continue to break to the downside. That, my friends, is a break of structure. And just to leave you guys off with one little tidbit here, when you're able to identify the side the break of structures are happening in, then you know the areas or what side you want to enter on. Because let me ask you guys now, with the knowledge you now know, if you guys were to look at this, would you guys be thinking that it's safer to buy this market or to sell this market? Right? You want to buy in areas where the buyers are getting re-entered to go in and ride the momentum that's creating the break of structures to the top side. So that's just a little tidbit I'll leave you guys off with. If you learned anything from this video at all, like, subscribe. Your support means a ton. I'm going to continue putting out content for you guys because I know what it's like to not fully understand or grasp certain concepts. and to keep pounding it into your head over and over again until you finally get it. So I pray this video helps one person. Take it with you. I'm going to make this PDF available for everyone. So that way you have a little cheat sheet you can study. And truthfully, guys, if you guys take an hour out of your day for the next 2-3 days, you're never going to question what a breakup structure is again. You're never going to have any doubts. You're going to know exactly what you're looking for, what it means, and how you can utilize it in your own trading. Peace.